Hey everyone. So I'm going to start this call off by saying that with new circles come new levels of information, and with new levels of information comes new levels of delivery. And yeah, so I am going to be a little more diplomatic in my approach to fundamentals. Um, I have about 4 people in my circle right now who I can honestly say have over the weekend given me information that I never thought that I would hear, that I never thought would be shared. Um, Without giving names, I am allowed to give you some of this information. What I will say in giving you this information is that I wanted to help to open your eyes and your view of the things that I have told you in the past. And hopefully it will help you to view things a little bit different in the future and as things start to unravel and evolve. So before I even tackle and touch the Forex Factory calendar, which I will go ahead and share, um, I'll start sharing some of these points because they're going to tie into some of the items that we'll talk about tonight on the calendar. So one of the first things that I'm going to talk about is water. We've talked about water before. Water's been on our radar, but one of the conversations I had really helped to um, really shine a light on how critical the situation is. So we all know that the earth has lots of water. There's only a certain percentage of it that's actually usable, drinkable, and we're also aware, we've had the conversation that the first person who can come up with a way in an inexpensive way, come up with an idea to desalinate water, then they literally could buy and have whatever they wanted in the world, like literally. The water situation in the United States is pretty critical. It's not something that gets talked about often. It's not something that will be talked about in the mainstream other than you hearing the word drought. We'll focus on the western half of the United States, primarily the West Coast. So that water supply typically comes from glacial and snow-capped melt. So in order to get that, you need to have snow. Well, temperatures have been warmer. It's been warmer not only in the United States, but in Canada. We've had the whole conversation about the permafrost melting in Canada and stuff like that. So it's not new, that part of the conversation. But what is new is the fact that the Colorado River, which it flows south, provides a lot of water resources for a lot of major metropolitan areas on the West Coast. As it flows, is evaporating more. There is a particular spot that I am not going to name, but you can kind of guess at it when I give you more details. There's a particular spot right now where this river pools, and it's at the lowest level it's ever been, ever. If this area drops another 270 feet, then they literally cannot generate power. This means power for like Southern California, Arizona, southern part of Nevada, like literally they will not have power if this water level drops. And the water level, when it drops a certain amount, the turbines can't run. So that's the whole reason why the power will stop. Also almonds, we eat almonds, you know, a lot of people throw them in foods that they shouldn't be in and everything else. But almonds, they're great, but they're really water intensive. California is one of the largest growers of almonds in the United States. And we focused a little bit when we talked about water as a commodity and how farmers were going to be able to actually use water futures to be able to predict the pricing of their crops going forward. This is no different from almonds. However, we didn't talk about, and I didn't focus on the crops that are just grown in the West, primarily in Arizona, New Mexico, Southern California, that they don't make sense. Like growing soybeans in the Southwest does not make sense at all, but they're grown there. Now the farmers in those areas are really having to think about what they want to do with their crops. And now that China has found new sources for soybeans, the farmers don't really have a place for these soybeans to go, and they can't really move them and shift them around like they used to be able to do. So that becomes an economic hardship. We know that there was some economic stimulus that went out to farmers last year and in 2020, right after COVID started, to kind of help bridge that gap. But that's going to be something that is long lasting, something that's going to continue to affect not only farmers, but the food supply. Not so much our food supply, but the food supply going out to the rest of the world, which there are a lot of people that depend on our crops that we send out. These farmers are going to have to find something new to grow. But here's the thing, particularly in Nevada, and even more specific within Nevada, Las Vegas, they currently have a drought going on. We hear about water restrictions and things like that, but this kind of amps it up and takes it to the next level when you hear about this. So now in Nevada, in Las Vegas specifically, I should say just Las Vegas. In Las Vegas, they are not allowed to grow grass. They're not allowed to grow grass because it takes up water. So now these, beautiful trees that you would see, these, grassy green lawns and stuff, they're not allowed to have those things anymore because it literally takes too much water to grow grass. So as we start hearing these conversations about climate change, whether you believe it or not, there are things going on with the weather, with the climate, that are starting to impact areas of the United States where now you're starting to see people weren't really supposed to be in these areas, and not in the amounts that they're there now. So in Nevada, on average, there's about anywhere from 90 to 100 families, not people, but families moving into that area every day on average. That's desert. When you think about Las Vegas, they have to have all of their water piped in. Even though the water sources that are around is a small percentage from the major water sources, it's still water that has to travel from an area where there's not native water. It has to be brought in. A lot of these areas in Arizona, same thing. So the solution that the Department of Corps engineers, who they're in charge of building bridges and dams and, doing the surveying for these things, what they have suggested and what they have been doing over the past decade or so is actually blowing up dams to release water to go back to their natural flow. Well, the thing about that is we have built cities and communities around these dammed areas. We use them as like artificial lakes, so on and so forth. To demolish a dam would mean that you would have to pay out millions of dollars to help relocate families. You would have whole cities and whole communities and villages that would be destroyed if you blew up dams. So literally now they're having to strategically figure out how to let fish flow naturally to help combat the fish shortage, which is a whole nother topic that is going on, and to help solve the issue that we have with commercial farms for fish, but then also to help provide for more water in these areas where they're not necessarily getting it. The conversation then goes back to, well, what is all this water being dammed up for in the first place? And it's for power. Well, when we talk about power in the last 2 years, we've actually firsthand have seen what happens when things go really left in the United States when it comes to our infrastructure. In the last 2 years, we've had a whole state power grid just completely go to shambles. And by that, I mean Texas, because they're the only state in the United States that's actually on their own power grid. We've had a winter storm that literally affected the whole continental United States, that affected the power grid and energy usage. Then we've had energy supplies hacked and literally paralyzed from the Gulf region all the way up to the New England states because of a hack and the fact that there's one main pipeline that goes from Houston through North Carolina up north, and it kind of branches off. So infrastructure in the United States is an issue. We know Biden and his administration has talked about infrastructure and what needs to be done to fix and help our infrastructure here in the United States. Per one person in my circle who is literally one of the most brilliant people I know when it comes to this issue. So we know this, we've talked about this part before, is that our power grid is archaic, super archaic. I didn't know it was this archaic though. I didn't know that there were still greater than 50% of the United States power grid that's still built off of 1935 chips, not even chips really, but wiring and software and technology and gearing. This person used to work on the West Coast at a very high level water facility. They're now in the kind of sort of East Coast, and told me they have to do maintenance on the power grid for this one particular area where they are now, and they had to go to eBay to buy parts to help fix this one little thing within this power grid structure. So that should tell you a lot. So, you know, I don't always give you guys information just based off of a person in my circle, no matter what their job title is and how much I've verified that. I want to tell you things that you guys can go verify for yourself. So you can actually go look up at the Department of Corps Engineers, and you can actually look at infrastructure grades for the United States. A lot of our dams in the United States have a D or F rating, which means that they, in some way, shape, or form, need reform, restructuring, shoring, something. Like something needs to be done to it. Our roads, our power grid, bridges, all of those scores you can go find. You can go look up, you know, bridges for certain states, certain counties, certain cities. You can see the last time a survey was done, what that survey score was. You can see, like, if your tax dollars that you're paying within your municipal city, your state, like if it's really going towards infrastructure, if your roads have a lot of potholes, that sort of thing, it's all there. So you can actually go see it and read it for yourself. So the other thing, just talking about infrastructure, and this is going to kind of now roll into our Forex Factory calendar, is Department of Homeland Security. So Department of Homeland Security, this is another person in my circle now. So the biggest thing that they are worried about, which is in the news, so it's not like some insider something, is Russia. Something that is kind of like, it's not an insider thing, but they have now dispatched Homeland Security officials to go out to these high alert, they're calling them high alert, but high alert facilities to actually test them for cyber attacks. So that one thing area that I was kind of sort of mentioning on the West Coast, but I never said its name, that's one of the facilities. There's 38 facilities in the kind of sort of central East Coast area that they're looking at. And then I tried to call my dear best friend earlier, and they couldn't talk on the phone because they were actually getting an actual visit then from Homeland Security to see if their security was up to par. To tell you what they do, they work at an oil facility in Houston. So Homeland Security is out in full force right now, trying to make sure that these cyber attacks from Russia that have been creeping up slowly since last Thursday don't affect and knock out our infrastructure like they did whenever they attacked our gas pipelines. All right, so how does all that tie into what we have going on? Well, the Fed kind of sort of talked about that today, in a roundabout sort of way. So we had 3 Fed speeches today, not so much from the United States. When I say Fed, I just in general talking about central banks. So we had a speech from Christine Lagarde, Governor Lowe, and Chair Powell today, all talking about the economy in different events and in different ways. But the biggest takeaway from anything that Jerome Powell had to say today was that we're still currently on track to get 6 more rate hikes through the rest of the year. So over the weekend, I was reviewing fundamentals with Mr. Levels, and we were going through the data. The data, if you guys look for it, it's there to be found. What happens in history anytime rates have been increased? So we have a cap. There is a certain threshold that the market hits, and it typically hits it within, it doesn't typically go all the way out to 2 years, but within 2 years, we hit the threshold where the market is like, we can't take this anymore. Where the Fed literally can't raise rates anymore and they have to lower rates. But when the Fed lowers rates, it's not because they want to, it's because they have to. That is what ties what I was just talking about with all those things in the United States. That's what ties that into this. So when our Fed starts talking about raising rates and they start talking about looking at the economy and seeing what the economy is saying back to them, our problems with infrastructure, definitely our problems with water, our problems with energy, all of those things affect inflation. And they affect inflation at step number 1. Because when you think about food, when you think about raw materials, You need energy to transform a raw material into a finished product. You also need water, whether it's to put water in the product to help run the power sourcing, to help cool metals, to help drill, whatever the case may be. You need water and you need energy. If water is more expensive or if water is more hard to come by, if energy is more expensive and energy is hard to come by, or we have some type of problem, whether it's a power plant shutting down, infrastructure issues, or a hack or whatever, if there's an issue, that is automatically going to stop that very first step in doing anything that we need. So in talking about water and in talking about inflation and pricing and stuff, the thing that I want you guys to remember and to always keep in mind is that when energy prices go up and you see oil prices come down, but you don't see that finished product, which in this case would be like gasoline. If oil drops below $100 a barrel, but gasoline doesn't drop, just know that whatever that price is for gasoline, it's there. Like, it's not going to go anywhere anytime soon. Biden and a couple of officials have urged for the gasoline companies to lower pricing. That's cute to say in public because it helps to make people point the finger at the corporation. But when you go to the gas station owners will tell you there's the minimum threshold where they're willing to sell gas before they take a loss. But I mean, profit is profit. So a lot of times they're going to be in competition with the gas station within a 1 mile radius of them. Because if you're using Gas Buddy, or if you're using your Google Maps or your Apple mapping system, if you're using a mapping system and you say, hey, Google, hey, Siri, what's the closest gas station? The first couple of gas stations, they're going to be pretty much within a 1 mile radius of you. If you need gas, you're not going to want to drive no more than 3. So these gas stations are always going to be in competition with one another. So you're not going to see one gas station that's going to be like $4.25 jump their price to $4.26 for that 1 penny of profit if their competition is $4.25. Now, if their competition drops their price to like $4.22, they're like, okay, well, more people are going to want to go there to save 3 cents. So I'm going to drop my price. But both of these gas stations, regardless if it's Texaco, Chevron, BP, whoever, they have a minimum threshold because there's a price that it takes to get these products out of the ground, refined and piped and sent out to locations. Trucking isn't free. Piping isn't free. The employees aren't free. Their energy bill is not free. So there is a cost to that. So when the government starts saying corporations should lower the price, it sounds good. Sounds really good. But that price that you see at the gas pump, just know that in some way, shape, or form, oil prices per barrel are going to shift again and come back up, and they're going to help make that price valid again. What is going to validate this current price? Well, they're talking about energy and Russia. Their whole Russia story with energy is kind of starting to lose its luster. Now, the biggest thing is, can they keep the story going for another 2 weeks? You just need 2 weeks. And then they can say Easter, it's the holiday travel season. There's more demand for oil and gasoline products. So then they can keep the price inflated. Then after Easter, oh, Memorial Day is coming up. Kids are graduating. It's the beginning of the vacation season. So they keep these prices inflated. When Powell, Christine Lagarde, and all of these other central bank leaders talk about inflation, all of these little teeny tiny nuances in the economy all roll into how they make their decisions. So conversations today, more rate increases. I will tell you guys 6 rate increases by the end of the year, if they're at the minimum of 0.25%, will put us at 2%. I'm not going to tell you. I just want you guys to see it for yourself. Go Google Fed funds rate history and look at over the last 70 years, what has happened every time the Fed has raised their rates. I will tell you, the Fed was raising their rates right up until 1981, and then we went to war, started having issues in the Middle East. The Fed started raising their rates right up until 1999, and then we had a market crash, Y2K, and then we had 9/11. Fed started raising their rates again up until 2007. Then we had 2000, they literally were raising rates right up until the crash. Started in 2007, kept lowering them through 2008. They started raising rates again to 2016, and that's when we had our little mini crash. They started raising rates again through 2019, and then COVID happened, and they had to lower rates. But everything that you will start to see is, if you overlay the Fed funds rate on top of the stock charts, when you start looking at the market and market changes, they literally line up. Every time we've had a market shift of more than 12% decrease, literally we have been raising rates in the 2 years prior. It's typically never more than 2 years. The only time it was more than 2 years was in 1980, right before 1981. And then the Fed's fund rate was like 16%. So it was super high. People think 2% is high now. Like, no, it used to be 16%. So it used to be in the double digits. So you check that out, you look at it, you tell me what your thoughts and opinions are about it. But going on through the rest of this week, I will tell you, it starts to get pretty news heavy towards the end of the week. We have 2 speeches that I'm going to be really listening out for tomorrow. Christine Lagarde, she speaks again, but typically she says a lot of her main stuff on day 1, kind of repeats it again on day 2. So I'll still listen, but it's not the main thing I want to hear. The biggest thing I want to hear is Chairman Jordan from the Swiss Bank. And then I also want to hear what the FOMC member, Mester, has to say tomorrow at 5 o'clock. The only thing I have to say about that is, if you trade U30, just remember that that Fed speech is after 5 o'clock. I mean, it's at 5 o'clock, so it's going to be after the market closes. So just keep that in mind. Wednesday, we get a Bank of England speech. Jerome Powell is speaking. We get 2 big items from the GBP. We get their budget release and we get their CPI. So we get some forward-thinking news about what they foresee in their next year's economy, as well as some inflation news. We get crude oil inventories, and then a minor speech from Fed member Bullard, who is actually going to be speaking twice. We get the first speech is at 3, the next speech is at 9:05. And that speech is, I don't know if it's going to be televised or not, but it's overseas. So that's the reason why it's a little bit late. But nonetheless, that speech is going to be important. And also, if you're trading U30, just know it's after market hours and it's at the very beginning of Asian session. So just be careful. If you're going to trade U30 on Wednesday night, I mean, technically you're not supposed to be in the markets like Wednesday after the market close anyway, but if you choose to, just know that that speech is after the US market hours and it's at the beginning of Asian session. So just keep those things in mind. Thursday is a super news heavy day. We get a ton of news out of Europe, a ton of news out of the United States. So we start with literally business economics. So it's going to be flash news. It's going to be services news. We get three items from the Swiss franc. So the biggest reason why I always pay attention to Swiss franc news is because it's a safe haven. You always want to know and see what your safe havens are doing, because your safe havens literally set the bar and set the course for where and what people do with their money. People have been piling money into the Japanese yen for a while. When the Japanese yen became more of a borderline currency, people really started to shift more into gold, shift more into the Swiss franc. That's why the charts look the way that they have looked, like for the last year, year and a half or so, because Japan just really wasn't fully a safe haven anymore. So that news for the Swiss franc, definitely going to be paying attention to that because it includes rate news. I don't suspect that they will change their rates. However, anything is possible with the Swiss franc because their economy does not operate like everybody else's economy. They don't have to think about the things that everyone else thinks about. And this, if they do change their interest rate, could show new allegiances and partnerships and what have you that they may have thought about forming or are forming, or whatever the case may be. So definitely going to be paying attention to that news on Thursday. German news is coming out. I care about German news because of how tied up their economy is with Russia and Ukraine. That's the only reason why I really and truly care about this German news. I lied. One more thing. Their economy. Now that the UK is not a part of the Eurogroup anymore and doesn't share in that responsibility, Germany has, they've fulfilled a lot of their debt obligations, but I want to see how they're going to step up economically to help out with the European Central Bank, and then just also within that group of countries, just trying to see like where they fit in now, like where do they truly fit in? Are they going to break off? Are they going to remain where they are? I feel like this situation with Russia is really going to be a determining factor, because if they feel like they can't survive without their resources that they get from Russia, then they might break away from being a part of the European Union and might just, decide to do their own thing as an independent nation away from the European Union. So then they can kind of function how they want to. They can do deals with China, Russia, Middle East, or whatever, and not feel like they're breaking some type of trust or alliance, allegiance, whatever. All right. GBP Flash news, same news that we're going to be getting from the euro. We get it from the GBP. Core durable goods and unemployment claims from the United States. We get a Fed speech, and then we also get the flash and services data from the United States. So if strong, if you choose to be in the market on Thursday, the flash news that comes out from the euro, from the GBP, and from the United States are all going to be news items that you could potentially trade against each other, because it's literally the exact same news, different countries, and they're already in pairs that we look at: EU, GBP USD. So Euro USD, GBP USD, they're already two pairs that we look at. So if you want to just look at it for economic purposes, what you would do is find the news and know what the news is for the euro, know what the news is for the GBP, and then when the news comes out for the United States, you're literally going to be comparing the results from the United States news to the GBP, and then comparing it to the euro. All right. And then Friday, we get retail sales. Retail sales for the GBP are important because this is going to help us to see how the people there are spending their money, but then also helping us to see how they've closed up and how they've closed up, but how they've also possibly strengthened their imports into the country and how they've also helped to build up their supply chains after their Brexit. And German climate info, that news is going to be tied into the German information that we would have gotten earlier in the week. And then we get consumer sentiment news for the United States, which is important because thinking and knowing the mindset of the people always is going to help you to determine what to do next. That's literally how the government functions, how the government makes their decisions. The more confident people are about the economy, the more money they're going to spend, and the more you know that your move to increase interest rates is the right thing to do. If people are not sure of the economy, they're not sure of their job, they're not sure of anything, they're just really negative, you might pause when it comes to hiking rates the next time that you want to do that, which would either be April or May. You would potentially rethink that if people aren't willing to put money into the marketplace, because bumping rates up again is just going to make it that much harder for people to get access to money. And then if they don't have money already, it just makes it that much harder for them to live. But then also it makes it that much harder for corporations to borrow money, makes it that much harder for banks to borrow money overnight, which means that banks are going to be less likely to lend money. Corporations are going to be less likely to pay people or hire new people. And corporations are going to find another way to essentially make their profit. If they have to take a cut somewhere, they're always going to take the cut on the side of the employee, either cutting benefits, cutting pay, cutting employment, or not hiring, because corporations have an obligation. They say they don't, but they really do when you look at the numbers, to their shareholders, because what makes a company profitable on the back end and what makes their C-suite, their corporate suite, profitable on the back end is stock prices going up. When your shareholders have money, they're getting dividends, their stock prices and their portfolios are going up, they're happy, they're willing to buy more of your stock. If you do things that piss off your shareholders, they're going to sell your stock. They're going to say, we don't care about your dividend. And then, they're going to go on about their way. And then that means your stock price goes down, your C-suite's losing money, your corporation is losing money. You don't have a lot of money in the pot, so then you really can't do anything. So anyway, that's that for consumer sentiment. It sounds like a lot. It's one little news item that affects a lot of things. It literally affects how corporations and government do business. And then Saturday, we get daylight savings time for Europe. So the euro, Swiss franc, GBP, they're all going to be going through daylight savings time. So at the end of the week, the trading times that you would get up for London and do your European trading is going to shift. Just keep that in mind. I'll cover that again on Wednesday and Friday. I'm done. I am going to go ahead and turn it over to Mr. Level so that he can get started with the technicals.
Cool beans. We appreciate that sauce as always, Carmen. You stay keeping fundamentals saucy for us, and we appreciate you. All right, Team Pips, I'll go ahead and jump into these technicals. See what we looking like out here in these market streets. All righty. As Corman said, we were both doing some historical fundamental analysis yesterday and some technical analysis. And so when I went over my technical analysis with Corman, this is what I analyzed last night while we was on our call. So last night, looking at the dollar, I wanted to see, we was right up in here last night when we was on a call around 8 o'clock. This is the 4-hour chart. So these are 4-hour candles. So this candle was where we was at. We was on about 8 to 9 o'clock, a little bit after 9. So we was right up in here price action wise. And I was telling Carmen that I wanted to see where I have this line right here. I wanted to see Friday's high retested. So this candle here is Friday's high, the 18th. And I told her that I wanted to see Friday's high retested. And so you can see that from last night to current time, we just had that high retested and price has broken above that high. Cool beans. That's what I wanted to see. Exactly what I wanted to see. So now that we're above that level, I want to see price hold above that level. If price holds above that level, then I want to see previous high retested up here and possibly our 99 cent level retested um and possibly broken, and we could possibly see price action continue to push to the upside if we get above our 99 cent level. However, if we cannot break this structure that we're currently at with retesting Friday's high, bringing us to this market structure, then of course, we have nowhere else for price action to go but to the downside to retest our previous low that we created right here on the 17th. And so with that being said, you have an idea on what I'm looking for out of the dollar. Let's look at our currency pairs. Last night I told, well, first of all, we understand that our currency pairs move inversely in correlation to the dollar. So that means they move in the opposite direction. So if I was looking for Friday's high to be tested to the upside for the dollar, then that means that I was looking for Friday's low to be tested on our currency pairs. And so that's why you see, whereas I had the price level marked to the upside on the dollar, I have the price level marked to the downside on our currency, Euro USD. And as we can see, just like the dollar, the level was retested to the upside this 4 hour candle, and our level to the downside, retesting Friday's low for Euro USD was just retested this hour. That's exactly what I wanted to see. Looking at GBP USD level, um, hadn't quite got retested yet, but we can see that price is on its way there. So going back to Euro USD, because we know we're not messing with NZD USD at the moment. So that's our other currency pair that we usually trade for any newcomers that we may have viewing this on YouTube. So looking at Euro USD, um, and going back to the dollar, if the dollar does hold above Friday's high, then vice versa, I would expect Euro USD to hold below Friday's low. And if we do hold below Friday's low, then we have nowhere else to go but um, to the downside to retest previous lows that we see here, here, and here. And we could potentially come back down to retest market structure that we see here to the downside. Easy. But if the dollar doesn't break above the market structure that is currently at, and it starts to push to the downside, then quite naturally, we will expect Euro USD to start pushing to the upside. And my eyes will be drawn to this level of imbalance that we see right there. Because what is imbalance? Imbalance is when we see selling and no buying. Selling, you see all of this selling right here, these 2 4 hour candles, and we haven't seen buying offered within those perimeters where we see nothing but selling here. That is what we call imbalance in the market. And so the market is going to be drawn to that imbalance to then balance itself out. And so that's where my eyes will be drawn to if we do see price action start to push back to the upside. Um, with that being said, looking at GBP USD, same thing. If the dollar continues to push up and it hold its current level and push it to the upside, then we want to see GBP USD simply push to the downside. And we see this little imbalance that we have here. What is imbalance again? Just like when we seen selling with no buying, it's the same thing when we see buying with no selling. So we only seen selling offered to the market down to this wick, but we did not see all of this buying that was offered here. We did not see that matched on the other side of that, meaning on this side. So we see selling offered down to this level, but I want to see selling offered all the way down to where we last seen selling offered on this side. So that would see us coming here. So if the dollar continues to push up, I would like to see GBP USD get below our 1.311 level here and potentially come on back down to retest 1.305. However, if the dollar holds its current level and start pushing down, then we know we want to see GBP USD push to the upside, and my eyes will be drawn where there's imbalance. Where do we see imbalance? Right here. All of this selling, no offer being buying. Um, Simple as that. Not looking at NZD USD, even though she looked like she easy sell. I just don't like how she's been moving lately. So I'm staying away from her. I'm going back to our call last night, my call last night with Carmen. I pointed out to her that if we didn't break back above this structure, that I wanted to see silver sell off back down to $22. So as you can see, we're still playing around in this. Now, something that I'm looking at now, I don't like how I see price bouncing off of this structure. We could see silver just pop straight up, come back up to retest these $26 price levels, and fill in this imbalance that we have right here. Um, that could very well happen, especially with seeing the way it bounced off this structure. But I'm gonna, I stick to my disciplines and trust my analysis. So, you know, um, of course, stop loss should be above this previous high that was created right here. Keeping your risk management in place and keeping your stop loss tight, and looking for optimum gains if price action does go in our favor, and looking for minimum loss if it goes against us. That's how you trade out here in these market streets. Looking at gold, same difference. Wanting to see gold sell down to around roughly 1870 to like 18, could get down to like 1850. Same thing, if we do not break above this structure right here that you see above this previous high, then I want to see gold sell off to 1860, 1850, 1870, 1850. But if we hold same difference as silver, if we hold this current market structure that we at, we could see gold fill in this imbalance that we see here, push back up to retest 1975 and possibly fill in this imbalance as well and push back up to retest 2070. So keep your eyes on silver and gold. As you can see, all is pushing. You know, Carmen fundamentally sees oil going to $140 price targets. You know, we've been tracking oil for the last couple of years. We've been had our eyes on $100 price targets. We reached that this month. Um, no, we reached that last month, 24th, and so now we're just basically monitoring the market and seeing how everything play out with all the issues that we got going on in the world right now. And so we could very well see oil reach $140 price targets before the end of the summer, possibly. With that being said, taking a look at my baby, last but not least, now because I'm gonna look at Bighorn and Ethereum tonight. So not last but not least, but looking at my girlfriend, U30, I told Carmen last night that if we did not break back above this level, that I wanted to see this imbalance filled in. We see today New York market opened up and we pushed right up to the level to retest the high. That was what we call a squeeze out to squeeze all the, over leveraged people out. That's lot sizes are larger than they should be. So this wick right here would get them out of the way because they're just in the way. It's what smart money called dumb money. So, yeah, this gets you out, get all of the paper hands, as we call them in the NFT industry, out of the way. And then you see market goes in your favor. And I know a lot of you probably seen that 1,000 times to where you've done an analysis and it pushes against you, but being that you're over leveraged because you're trying to get rich overnight, so you're trading way bigger lot size than you should be in the first place, and more than likely your stop loss is way higher than it should be. You get stopped out of that trade, but then when you come back and look at your account, you see that the trade did go in your favor. I know that drives you crazy, but that's what you get for being greedy and over leveraged. So that's what happens. Um, Somebody can you mute your mic, please? About to let us hear everything. And so, um, what was I? Okay, you 30. So, um, we got this imbalance filled in. So, okay, now I want to see if you 30 holds above this market structure here, going into um throughout the rest of the Asian markets tonight and going into the London markets in the morning. And if we do hold above this market structure, then um, I want to see you 30 push back up to fill in this imbalance and retest this high at 35,860 something, somewhere up in there. Let's just say 35,865. I like that number. So that's if we hold. If we break below this level, then okay, we coming to fill in this imbalance and possibly retest our 33,723, 33,659 levels. That's that. Bitcoin. Okay, I had this analyzed for you guys about a month ago, just telling you where I seen Bitcoin going overall. Um, Always remember that I've always said that I had Bitcoin going back down to 19,800. With that being said, for the moment, as long as we stay above 36,300, then I'm bullish. Um, so I analyzed this for y'all a couple weeks ago on the 26th. Told you that I wanted to see price come back up and retest our structure, and if we didn't break, come back down to retest our level here. We didn't quite get down there, but we see prices now slowly making its way back up. What it appears to be doing is making its way back up to structure. And if we get up in there and we break above this structure, and if we can hold above 47,000, then we should be in for a good summer for Bitcoin. However, if we get below 36,300, then keep your eyes on my 19,800 price targets. Ethereum, same thing. I told you guys that I wanted to see Ethereum come back down and retest our price um, levels at 2170 and 1900. We did get down and kiss the 21.7 level perfectly. Bounce back up off of that to come back up, of course, and retest previous high, previous structure. That's why we simply trade raw price action and market structure, because when it comes to technical analysis, that's all there is price action and market structure. All the rest of the indicators and all that good stuff is cool. I use my RSI every once in a blue moon. But to keep it all the way funky with you, all you need is simple price action and simple market structure. That's it. Um, and so we see now price Ethereum looking like it's want to push on up. So if we get back above this high, then I want to see this high retested. And if we stay above this high, I want to see this high retested. And if we stay above this high, I want to see this high retested. And if we stay above this high, I want to see this imbalance filled all the way in. And then we'll see how price action reacts when we get to this structure. That's literally how you have to trade these markets. You have to trade these markets candle by candle. And um that's hard. Um, it's really hard because you really have to pay attention to what price action is doing candle by candle. Now, that depends on whether you're swing trading, scalping, or whatnot. Because if you're scalping, you're only in for a few minutes, 5, 10, 15 minutes tops, and you're out. Um, but even then, you still gotta pay attention to what each candle is doing, because that's price action. That's literally how you track price. You have to track it by whether the candle sold or whether the candle bought, whether the next candle sells or whether the next candle buys, whether that next candle sells or whether it buys or whatnot. You literally have to track price candle by candle. That's the only way you can determine what price action is doing. And so that's hard. That's a lot of work. And that's why mastering these markets is so difficult. Even what Corman was saying about going back and doing the work, um, looking for the historical data. That's work. We was on a call for a couple of hours last night doing what we was doing, but what we gained from it was priceless. And so I just encourage everybody to like really dig into what it is that you're trying to accomplish in this market. Um, and just know that this thing is a marathon. It's not a relay. This is definitely not a get rich overnight gain. This is a compound interest gain. And through sound fundamentals and sound technicals and applying the proper risk management to these markets with time and compound interest, you can grow a trading account to whatever size you want to. That's a fact. So, with that being said, I want to take a look at one more crypto before we get out of here, and that's the new one that just got listed. That is the Acorn. I've already started tracking historical data, the little historical data that we got, because this coin literally launched on the 17th, but we got a little bit of data to work with. And so I'm gonna go to the hour. And so what I'm seeing right now, as long as we stay below $10.80, this no, let me see. I'll say $10.98, this high right here. As long as we stay below this high, then I want to see 8 come back down and retest $8.80, 8.8. And then I will buy here. Even if we dip back down to my low of the price that I got marked here at $7.26, I'm still gonna buy at $8.80 at $8.80 because we could see it just springboard off of off of that price level, and we can see it springboard from $8.80 back up to $12.90. So that's profit to be made. And then we'll have to see how price reacts when it gets there. When price do get here, you already know. If we break, we're gonna look. So I want to see something like this, right? If we break, if we come back and retest and we hold, then y'all already know the scope. We're going, I ain't gonna say to the moon, but we going higher than the all-time high which was $18. So I'm liking Ape. As you already know, Ape is the coin of the Bored Ape Yacht Club, Yuga Labs, which are the owners of the Bored Ape Yacht Club project. Um, so um, they've already raised 5 billion, and what they got coming is it is mind blowing. It's out of this world. Like these guys are, they like, it's crazy what they're doing. So yeah, keep your eyes out on Apecoin. I definitely see her being a long-term hold. I definitely see her paying out some major value to the space um, over the next few years. So with that being said, at this time I'll start the recording and take any questions.